desires, my heart overflows. The only direction that I'll ever need is a deeper connection that's leading me. And I'm lost in your love when you hold me. Just hold me, 'cause I don't wanna run from your heartbeat. Your heartbeat, no, 'cause I'm lost in your love. I can't break the fall, you're taking it all. I'm lost in your love. Oh, I'm lost in your love. I'm lost in your love. I'm lost in your love. Lost in your love. I'm lost in your love. No words can change the future of us. The waves, they break, but we are enough. The only direction that I'll ever need is a deeper connection that's leading me. And I'm lost in your love when you hold me. Just hold me, 'cause I don't wanna run from your heartbeat. Your heartbeat, no, 'cause I'm lost in your love. I can't break the fall, you're taking it all. I'm lost in your love. 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 Lost in your love. I'm lost in your
Separated through the miles, searching for the answer to our trials. We came so far through our weakness. We found a love, even the stars between us won't marry us. One day we can be together in this moment. Monochrome is all I've known. Faded black, shades of white and gray. Until you colored my day. I was seeing solutions, saturated shades until you washed it all away. And I'm left with black and white. But I wanna see the skies again, the sunlight in your eyes. I wanna feel the way I feel before the compromise. And I want all the undertones instead of being stained with your glow. Instead of seeing shattered lines, don't let me be colorblind.
Sun fading, sky gazing, stars are the jewels of the night, hidden behind a horizon, into the moonlight, into the moonlight. We were chosen, hearts are frozen. We were chosen, hearts are frozen. In time, in time, in time. get no sleep. I keep thinking I'm in too deep. The clock keeps ticking as the time flies by. I keep thinking that I won't survive, but my body won't let me drown. Still my mind is falling down. shadows, they follow you like an accomplice. Lost all of your dreams, the night is heartless. My shadows, they follow you. My shadows, they follow you in the darkness.
I think I'm falling in love. Oh yeah, yeah, yeah. I'm feeling I can't ignore. Oh yeah, yeah. You can see it in my eyes. What I'm saying is no lie, no lie, no lie, yeah, no lie. Being with you is my medicine. Being with you is my medicine. Being with you is my medicine.
Any workout, any mood, anytime. That's what the Peloton Tread is all about. From interval runs that motivate you to go the extra mile, power walks that work up a sweat, rolling hill hikes for you to enjoy, and full body boot camps to hit your goals. Plus, thousands of workouts that go beyond the tread. Strength programs, core classes, yoga, Pilates, and even boxing. Everything you need on and off the Peloton Tread. Experience it all for yourself with a 30-day home trial. Learn more at onepeloton.com.
if that works. Check. Can you guys hear me? Y'all been able to hear me all morning? Hold on. Y'all can hear me? Woo! Okay. All right, let me start over. Here I am, like, I was trying to balance both of them. I kept turning on the mic to say, hey guys, how's it going? And and nobody was saying anything back. And here I am being such a nerd. Okay, hi, what's up? Where have I been? Oh, I've been on Twitter Spaces. And apparently talking to myself when I thought I was talking to you guys. Yeah, I definitely don't like y'all anymore. Faux show. Okay. Jeez. Thanks for letting me give a whole lesson in silence before y'all told me I was muted. So Twitter Spaces is a platform on Twitter that allows like a Hangouts style chat group, I guess. Like, you know, like Google Hangouts or something where you can actually just like have everybody together and then you can open your mic and chat with each other. It's been converted into a podcast forum for Twitter folks and financial Twitter. So you guys know, yeah, we've been talking on Spaces. So you guys know, if you follow me or follow my other side of what I do besides just trading and things here, I'm a speaker on like a ton of different podcasts and things, and a handful of them are in the Twitter Spaces format. So like I'm a panelist on the Streets weekly podcast. That's through Twitter Spaces. And then of course, Tuesday mornings, Rocket Scooter has its own hosted podcast with financial, stock market news. You get a lot of the big name Twitter folks come on there every once in a while. And so that's like our time as well. So we're on Twitter, just talking markets, demonstrating Rocket Scooter and other things as well. So like a clubhouse. So welcome back, everybody. Okay. So today, let's walk through a couple of things. If your first time here, go to the free trial, go here quick. See, one of these days I'll get it all right. Here I am. I kept on like chiming back in when I wasn't speaking to talk to y'all and teach lessons, and nobody was saying anything. I was like, oh, they're so deeply ingrained in the market. My team, they're good. But I'm the schmuck with the muted microphone. How about that? All right, hold on. Let's see if I got my don't laugh if my, oh, here it is. I'm still playing with my green screen and setting everything up. So I'm moving things around to get a better view and angle on the camera. What did I have, like a, did I have like a dark spot on my forehead? What did I sleep in last night? I don't know. Maybe I have a bruise. Looks like red. Okay, so let's go over a couple of things that happened today. New here, heard you on Twitter. Hey, Nick, how's it going? Okay, two things. You guys ready? Okay, wait. Does it look like a red spot on my forehead? I think I just like slept on it weird last night. I don't know. Yeah. Anyways, okay. Hi, guys. Welcome. First time here. My name's Matt, CEO of Rocket Scooter. I am a day trader. This is 2023, so I've been trading since 2010. That would be 13 years ago. I'm a former chemical engineer. Worked for Dow Chemical as a reaction run plan engineer. I used to run a chemical reactor. It's fun. This is more fun. It's a bigger puzzle. I love it. Pivoted trading 13 years ago. Haven't looked back since. And since then, we've developed the Rocket Scooter trading platform, which is a brand new style of analysis built by some engineers. And hopefully, you know, if you guys heard us on Twitter, thank you for checking it out. Invite you to do the free trial of the platform. So I'm just going to walk everybody through how to get it really quick. There's no credit card or anything. You literally just, in less than like 30 seconds, you're in. You can play with it. We've kind of removed a lot of the, you know, entry-level barriers most traders do experience when learning how to trade, which is just an overwhelming abundance of technical indicators and things that are just requiring such a huge learning curve to get started. When you load up the platform, it drops everything that we teach on the platform in front of your face. And so it's already there, and we just train you on what everything's doing. So the first thing I want everybody to do, I'll give you about, you know, a minute or two. Go here. I just posted the link above where Nick had talked. I'll post it one more time. First thing you do is go here, click on that. You sign up, you get your data feeds, and you're good to go. And then as soon as you log into that, you will see a little bit of a dashboard. So I'll walk you guys through the dashboard and where things are. Pull this up really quick. So after you log in and get everything together, I'll show you what it is that we do. And so the type of analysis that we do here is called positional risk analysis. It's actually something that we did invent. It's a new style, and I think that that is going to be something you're going to love. So I'll give you 1 minute to do this. Let me send my developers in it really quick. Okay. All right, we did have a release today as well. So while you guys are getting situated there, I'm going to walk you through some of the newer updates. We had a brand new update last night with a bunch of neat stuff. I'll walk you guys through all of it is. I know there was some folks who are asking where some things are. So I'm going to go ahead and post these in the announcements. And once y'all are in, we'll get started with the lesson and walk you through how to get access to everything. Okay. So these are the newer features that are going to show what we have on the platform. It's really exciting. So we're doing some graphical changes. We have a lot of neat things and new things coming out. Okay. Dates are looking sweet. Yeah, I think so as well. Okay. So first thing you do, everybody gets the platform. Platform is good to go. The next thing I want you all to do is go to the Discord. Let's get you all into our Discord. Our Discord chat is free. I know a lot of people out there have paid Discord services. You can probably, if y'all want to join a Discord, you probably could cancel that. Unless you want some teenager making stock callouts for you and you risk that they are one of the folks in Atlas Trades or something who are out there about to have their day in court. You know, you got their pay for paid Discords or listen to people's callouts. You're risking being part of some kind of big scam like that. So be very careful. Paid Discords, I'm a very anti-paid Discord thing. Our Discord's free. I don't need to pull $20 a month for you guys to listen to me talk about my trading. I do it all for free on YouTube. Discord will be free. So there's a free Discord. It does support Rocket Scooter. So there's, again, it matches with the free trial. Go to that link, click it. There's a little thing that says getting started on the left side. It'll tell you to type something in to unlock the Discord and you're good. From there, it's all kinds of educational tools and materials that walk you through the platform. And we have so much stuff there that you guys can come in and hang out, check it out. And when I'm not streaming, we're always there. We have 3,700 people. It's very active. And you're going to learn something from somebody there. All the team is super cool. All the members is super cool. So once you get in, your dashboard's going to have a specific look. And I will walk you through it really quick. This is Jaws. He gave this to me. So this is the newest thing. The dashboard will look like this when you log in. One of the things they did is we programmed something that allows you to update your card. So that's one of the things. You can update your credit card, which is good. Wow, my hair looks like it just crawled out of bed. Don't make fun. Rocket Scooter platform is this button right here. So you click this button, platform will just launch up and load up just right here on your screen. This is what we call the classic app, which is a condensed version without charting, just for if you want some simplicity. You can get most of the indicators in that version and save your screen real estate like if you use another charting platform. So an update card feature, that's pretty cool. These will all direct you to different places. These are the educational videos. Again, the link to where the Discord will be. Quick start will take you to a video that just walks you through what I'm walking you through right now. Same thing where everything is located. Liquidity map will open up the liquidity map that you see me reference and talk about. It is a little guide that we have that allows you to interpret the algorithm by showing where the pressures are in the market, where where buyers and sellers will likely be for our volume prediction pivots. This is a little, like, the algorithm will give you some code letters at the top, like a BRSU is an example for SPY. It's automated, it updates in real time. It'll just tell you. And what I do is I go here and I find BRSU for SPY, and it shows me that while there is a general downward pressure in SPY, there's a general downward pressure in SPY. The maximum upside in this particular setup is this blue, which is this blue right here. And as you see, this is resisting very nicely. Doesn't mean I've predicted the market, but hey, it's pretty damn close, right? So what am I doing here is a whole different process, and those videos will teach you what liquidity map's actually doing. It's balancing bull and bear positions, actual bulls and bears in these positions, with the hedging of market makers balancing, trying to find liquidity of those traders in those positions. So you get this kind of like push and pull behavior that I use to find pivots. There's no more trending indicators. There's no more, you know, colorful explosion charts that look like the opening scene in a Star Wars movie with like colorful lasers everywhere. You're going to save your retinas, and this is the max amount of indicators you'll likely see on your screen. Where are the green and red lines in the SPY chart? So we don't currently draw these on here yet. We haven't reached that stage. We have other things we're building first. We just made you an infographic that kind of you just hold on to the side, and you can either print this out or keep it in your, you keep it fresh and in front of you. But the next couple of iterations, I'm talking like the first quarter, we're going to have so many different advancements to the platform. One of the major things we're going to do probably about March will be to have this on here, the irrational signals and alerts on here as well, which will actually show where all of these pressures are, but with the lines. Why is it a BRSU if it didn't open under monthly hedge pressure? Great question. So in real time, the map pivots. An example is when you look at, let's start off where it was. Okay, well, I'll walk you through a couple of things. Because it's below hedge pressure, it's changed from an L to an S. So this actual second number shows relative to where you are at the blue in real time. So if you were to chime in right now, that's where it is right now. It's in here right now. If you're chiming at the start of the day, it was actually what we call like a mean reversion. It was in the middle of bull and bear zone, which means that the minute you touch the middle, the day is over and it's unpredictable. So at that particular start of the day, there was no setup. These mean reversions just show that you balance. Let me pick a different color. You balance between bull and bear side. And this is one of the first takeaways that we teach everybody here. And I want you guys to learn your first lesson today. When the market is in between a bull zone and a bear zone, when you're trading between any bull zone and bear zone. So what is a bull zone? This is where the real bulls are, where there were no bears or not enough bears. This is where the bears are when there were not enough bulls. We've used this, we get data from the options market data feeds, and we isolate market maker options because a market maker will trade against a bull when there's no bear, and a market maker will trade against a bear when there's no bull. So we find their options, then we find the real bulls and bears. In the middle of the bull and bear zone, right here, it's called a liquidity pocket. It's the first thing that we love to teach. And a liquidity pocket means all of these bulls are losing the trade. I like to say L for losing. And all these bears who were short the market down here are also losing in the middle. The neat thing about what max squeeze or max pain or whatever you guys have heard before is liquidity pocket is when the market's actually the most balanced. Buyers and sellers are in close proximity to each other. We call that liquidity, right? The market's very liquid. Traders exchange money and shares at a higher frequency. Exactly at the liquidity pocket is the maximum amount of possible potential trading. So in the middle, bulls and bears are both losing to the house. Everybody's losing their trades. So the probability of them acting is really high, getting out of a loss. So when you touch a liquidity pocket, the moment you touch it, the very next thing that you do, okay, I'll just walk you through it. Ready? Let me show you how this works. The minute you open in the middle and it says mean reversion, so MR or liquidity pocket, in the middle, M for middle, the minute you touch either wall and then touch the middle, You go right here and you click this X, and then you close down for the day, and you're done for this thing. You don't touch it anymore. The market ended its predictable path 4 minutes after we opened. Do you understand that? Because what happens is when the market's balanced, you can't predict who's going to overwhelm the other person. You cannot predict the future. No indicator, we've actually proven with statistics and looking at our own data and backtesting that you cannot predict which way it breaks out once it goes to the middle. So in this particular day, this would have alerted you to the market being 100% random 4 minutes in. The first thing we teach is to understand and discover a random market. Hopefully you can discover that with someone that has better handwriting than myself. But from this moment in time, the market is random. From here, 4 minutes in, everybody's like, random. Hit the liquidity pocket, random. And look at that. Look at that cool breakout into the bull zone. Oh my God, it sold off. Well, why? Random is random. So you don't try to predict direction in random markets. Do we all understand? Lesson 1. Thumbs up. Because what happens in a balanced market, where if this is where the price currently is, if you were bullish anywhere in here, you're losing. If you were bearish anywhere down here, you're losing. So when everybody's losing, they're all kind of staring at each other like, who's going to act first? And you can't predict who's going to exit a losing trade first. It's based on everybody's risk and exposure. Who has a margin call right here? Maybe these bulls do this day. Maybe those bears do. You never know. You can't have that visibility. So to understand that you don't know who's going to act right here, why flip coins? Instead, just know that it's random and find something else to trade. So far, so good? So with Rocket Scooter, you can identify with a rule. Today's the day to sit out. Did I trade this? No, it's random. Did I trade this and buy the dip? No, it's random. It's random all day long. It's going to be random all day long. So anybody out there trying to day trade or predict or pivot the market from here is just a glorified coin flip. Look at all these. False breakout to the bull side. Lost. Market's dipping. Okay, bounce on hedge pressure. Nope, lost. Why? Random. Random. Market's falling. Look, it's in the bear territory and starting to bottom out and start to pivot. Why? Again, random. Random, 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 random. Don't try to make predictions when the market has proven that it's already triggered that randomness. Pretty cool, right? So you get a lot of weird artifacts and hard to predict behavior the minute you find the balance point. The whole point and reason markets move is to find liquidity. The only reason markets go up and down is to find buyers and sellers. Why does price go up? Because dealers are quoting the ask higher, because they're only willing to sell higher because there are no sellers here. So if they have to sell, they're gonna short from a higher spot, right? So markets go up to find sellers. This is how price action moves. Markets go down to find buyers. But if you're in the middle, you found both of them. They're neighbors. They're right next door to you. This guy's house and this guy's house. They're watering their yard, giving each other nasty looks like, you're a bear, you're a bull, right? They are literally sandwiched together. Liquidity is where sellers and buyers are in the closest proximity to each other. And therefore, the market maker has no desire to raise or lower price anywhere. The market will move purely on traders exiting their losing position more often than anything else. Maybe some active buying, but why did the market move up from a random spot while it's balanced is because shorts covered their losing position. There's a short squeeze. How do you know there's a short squeeze? Typically accompanied by unusual volume increase that you see right here. And that's evidence of that being a short cover spree. So shorts covered, and the minute they covered, longs are like, oh, thank God, let me get out of my trade and let me sell off my trade as well. How do you know this was long selling? Again, increased volume. So this type of predictable behavior is telling the story of what happened in the market. What did I do? Well, I didn't long or short. I didn't do anything. And so I didn't chase the breakout. I didn't short the low. Maybe some of you longed here and you're losing. Maybe some of you shorted here and you're losing. Isn't that funny? Again, being in the middle, if you chase the long or chase the short in the middle, you're losing on either side. And welcome to the dilemma of day traders. When you chase breakouts and chase lows in a random market and it retreats back to the middle, you are upside down if you were in the boat that got tricked. Have you been there before? We've all, like, type a big fat yes in chat if you've been there before, right? You thought it's going to break out, you longed, and now you're upside down all day long. You thought it's going to crash and you shorted, and now you're upside down all day long, right? Sellers and buyers that are trapped, you are liquid between the two, right? We've all been there, and that's what's happening today. So a couple of layers to this is liquidity pocket is the first thing that to understand. So right now, why does it say bear short up? Because right now, that's where we are now. But at the point of once you hit that liquidity pocket, you no longer try to make any assessment on this. So anytime you run something on Rocket Scooter and it has blasted through and tapped the middle from one of the walls, the rest of the activity for the day is going to be random. And as you see, it is fairly much random. As a matter of fact, it might travel very far and end up in the same place. No guarantee. It can rally, it can crash and go nowhere. But what I do is not try to predict direction. Okay. So far, so good. Type in a ticker really quick. If you guys don't mind, let's play a game. Let's play what I like to call the lightning round game. So what I'm going to do is I'm going to use liquidity map, and I'm going to draw on my chart any ticker you guys tell me a ticker, right? I'm going to go in here and use just this tool right here. Actually, I'm going to use the classic app for this one. And all I want you to do is tell me the opening price of that ticker. I'll use the classic app for this. And I won't look at the chart, and I'll draw what I think that ticker did just using these 3 letters. No looking at price history, no daily charts, no confluence, which, oh my God, word makes you want to vomit. Tesla, okay, let's start at the top. Tesla, but I need the opening price, JL, right? No, so Karan wants the market in a liquidity pocket. Anytime you were in the middle and you confirm the bull or the bear side. So anytime you're in the middle and you touch either edge and then touch the middle, then it's balanced. That's a balancing act. So example here, you open in the middle, the market dropped to find buyers. And so shorts started covering, those are those buyers. So the minute you hit one edge and then you touch the middle, the market makers have told you we lowered price to find buyers, and boom, there they are. And now people are buying, and now we're in the middle and balanced. So this act or that act ends the day. Yeah. You have to test the wall first. You have to confirm that there were buyers to confirm the authenticity of the balancing act. So Tesla, 118.33. You want me to show you something pretty cool? Okay, blank spot on the chart. I'm not looking at Tesla right now. Tesla. Okay. All I do is type Tesla into the app. You can type it in here as well and do the chart, but I'm using the classic app, so I can't see the chart. And I'm going to draw what Tesla did, or what I think Tesla did, based on just the letters. Tesla, it says B, R, S, and U. And you said it opened at what, 118? Okay. So Tesla opens right here. So I'm going to draw that, right? And 120. Oops, let me type in a date here. Let's go ahead and put in that. Let's get the actual. There we go. So this is something you can do. I've actually completely gotten rid of looking at charts and historical charts. These are the active positions on Tesla today. This is what we do here. You can see that there's call territory, and I'm just going to draw it very quickly. Actually, I'll teach you after I do this. Okay, so Tesla has opened at, you said, what is it? 118? Okay, let me put it right there. So Tesla has 120 hedge pressure, 122.5. Monthly 120, 122.5 here. So what Tesla likely did was hit 120 and continue to fall. The very low probability that would break up in here. And again, remember that liquidity pocket, it's random if it does touch there. My call is Tesla has resistance at 120 because of that and continue to fall when it opened. Haven't seen the chart, haven't seen the historic chart, haven't looked at the Tesla chart in a month. There you go. Oops. What did I draw? Can hit 120 and sell off, and hit 120 and sell off. Any questions? And even look at the chart. Now, how does this work? Doesn't mean I predicted it, but hey, right? I try to guess what I think is going to happen, and then I would trade it. You can get it wrong. If I got it wrong, see where that X is? The X is my stop. So I can't predict it, but that was my bet. Hit 120 and sell off, and look at that. Pretty damn close, and all right. Y'all like that? Give me 9 more. Random stuff. Just throw curveballs at me. I'll teach you how to do this. So like I said, get the free trial. It doesn't matter if you use technicals, fundamentals. The idea that I know Tesla has a downward bias and I would short and stop right there is just from the 3 things, the 3 letters you see right there. That's telling me where the market is predispositioned to have activity. Doesn't mean it predicts anything, but it means I can plan my trades where I think it's going to pivot. So with Tesla, BRSU, we open below yellow. It is at its trade, it's a liquidity path number 1 with that general resistance off of that monthly hedge pressure. I need to know, the trick is I have to know where we opened, because think of it like this. Like imagine the open is like you have like a spring. You're either pulling it this way or pulling it that way. And the minute order flow starts happening, everything starts shuffling around. So the only thing that I need for that stock, besides the active positions and the hedging, is the opening. I need to know where we open so I can see where that spring starts unraveling. So type in a ticker like JP Morgan, and you said 135.24. I need to know exactly the price at 9:30, and we'll do that. Okay, JP Morgan. So don't just type a ticker. JP Morgan. Do a couple of these. And we'll do the rest, and we'll do a Zoom call. So when you guys go to the Discord really quick, let me put that in there for you one more time. And then we will go and have a Zoom call and do the rest of these, because I don't like to be on YouTube all morning. I have to go to Zoom so we can talk turkey and really dive in the educational side of this. Okay. What'd you say? JP Morgan? Okay. Mean reversion already. And you can see that JP Morgan is balanced between 32 and 33. You said JP Morgan opened 35.24. Oh, ooh, okay. So we did have a different setup. So JP Morgan, it looks like opened way up here. 135. This is a losing trade. Great. I love to show losing trades. I would have, if I were trading, would have made a decision that would have actually stopped me out. And it's great because I would have had a minimum loss. So JP Morgan, are you certain open at 135.24? Based on what you're saying, I will assume that's the case. JP Morgan opens at 135. You can see that 133 is bullish, right? 0.24. You also have hedge pressure 134 and then 135 monthly. So you have all of these supports right here. And so what I would have done at the open was, if Tesla would have, JP Morgan would have opened there, I would have probably longed right at 135 on the dip, and I would have stopped at 134 to bet that the bull side stays bullish, not long hedging stays long. So I would have bought with a 1 point stop and probably gone to some level, which we'll show you in the Zoom call how I picked my price target to see risk and reward. So I'll give you like the quickie on this one. So 120, there is no resistance, right? So that looked like a pretty good setup. Now I can tell, because it says MRLD now, that it likely broke through and crashed out, which is good. So it started off what we call bull, long, down, and it's now changed as it's fallen and updated in real time. But the opening setup would have been these letters right here, which I would have likely taken trade number 1, which is I'm showing here. I'd probably longed off of monthly to bet that it stays bullish for the month, but I would have quickly jumped out of the trade one strike below at 134. So if I bought at 135, I'm expecting it to rally for the month. This yellow line is support for the month, and it does move every day, but that, as long as you stay above that moving target, you're getting that positive hedging on the month scale, which is why the M reminds you it's a month-long scale. So had I bought at 135, I would have stopped at 134. And let's see how JP Morgan played out. I can already tell from what it did. Oh, wait, never mind. Oh, I wouldn't have stopped out. Hey, there you go. Boom. Why does it say mean reversion? Just... Hold on. Let me try this really quick. This should actually say bullish. Let me double check this. That actually should not be mean reversion. Let me type this really quick. So yeah, so there we go. I would have bought at 135 and stopped them with the... Why did it... Let me see if there is a... Yeah, so anyways, there was my trade plan. Boom. 2 for 2. Throw me some more, guys. What is that? That is so weird. I thought I had sold off by looking at those letters. Let's see. There is nothing above here. Let me report this to him. 1 second. I need to know the ticker and the price at open at. So Ben Fisher says Bank of America, Chase says Apple, Azim says Microsoft. You got to tell me the opening price and I'll do it. So 2 for 2, right? So I'm taking that 135 long with the 134 stop, and there's that 135 long with the 134 stop. Again, I'm doing this without looking at the chart, without looking at historic data, without putting 5 different time frames of JP, making all this analysis, all these indicators. I'm just looking at where hedge funds are positioned and where market makers are hedging and making an analysis off of these 3 numbers and those letters. That's it. It proves that the market does not care about anything that happened in the past, because I'm not looking at anything from the past other than people's positions now at the moment in time the market opens. So here's what you've been doing with your trading career. Don't let your technical analysis gurus or people take technical analysis and incorrectly call it an algorithm, which an algorithm is not a continuous math equation that just follows historic price. I'm proving that I don't need historic price to make an analysis for today, which means anything that uses like MACDs or Elliott waves or pick your favorite, they're always named after animals, pick your favorite animal in the chart, harmonics, all of that garbage relies on historic data. When I'm saying tell me the price we open now and I'm looking at 0 history, there is no historic data that goes in here, and I will draw what happens today using 0 historic anything. The point is to say that historic data has 0 correlation to today's ability, because I'm showing that you don't need it. I will do 10 of these and I will get them all, hopefully, a really solid trade plan. If I get them wrong, I'll exit with a really solid exit, right? Without using any historic data. The reliance you have on technical analysis is just the guru scams of the past trying to sell you textbooks on shit that doesn't work. Okay. Right? So the idea is that while I've been very rehearsed and practiced on these things, because I've been doing them for a while, I just look at where the bulls are right now, the bears are right now, and the active hedging right now, because that is everyone's homework in some of their risk and positioning now. That's where everybody wants to be now. That's all of the fundamentals built in. That's all the insider trading built in. That's all the knowledge that exists for that stock built in, because that's where the bears are and that's where the bulls are. Doesn't matter how they got there, right? Your millions of goofy looking indicators are just trying to look at how it got there and then try to predict where it's going to go because of the shape of how it got there. It's very silly. A real mathematician would look at historic technical analysis and go, what? Why would you assume human behavior today can be forecasted by what they did yesterday and the day before? Market conditions are constantly changing, dynamically changing. It's never the same. You cannot predict tomorrow or today from yesterday's behavior. 0% chance. And I even made a post on my channel and I said, I invite anybody that sells a technical analysis thing to show me a 3 to 5 year broker statement, to show me that works. I bet you for 50 years, that comment will stay there with no replies. Nobody will rise to that challenge. Okay. All right, let's go for a couple more. It's just the whole reason, because while if you do use TA and you're successful, it's because you're good at other things. You're good at analysis of risk. You're good at escaping a trade and having all the emotional control you need, but you don't need the training wheels with that. So that's why I like to play this game, to prove that you don't need any of that. Okay. So somebody said, again, I'm not looking at the chart. Microsoft is, okay, so what I'm gonna do is I'm gonna go to the classic app, or you can do it on the Rocket Scooter. Like if I type in JP Morgan, right? It will show up and give me what's going on with JP Morgan. So for me to play this game, I use the classic app, which has no charts, and find a little blank spot here. And you said Microsoft at 243.2. So I'm gonna go in and type in Microsoft. And I'm gonna see that there's a very clean split. Microsoft is bullish right here. Microsoft is bearish right there. You said it opened at 243.2. So let me walk you through how to analyze this. This already gives me the letters, right? So in the letters, liquidity map looks just like this, BSD and BSD. Microsoft has resistance against this blue thing, and that blue thing is what's called hedge pressure, which is that number right here. So Microsoft today has resistance at 242.5 and bullishness from 237.5. So it's a nice big fat range sandwich on this BSD. So I expect Microsoft to likely push higher and hit some resistance right there. So right out the door, you said Microsoft opened at 243.2 right here. And then there's 242.5. Wait, hold on. It's 243.2. Wait, hold on. Oh, wait, hold on. Oh, I had it back. Okay, 243.2. 43.2 is the open. Okay, so we actually have support below it. 242.5. Okay. Ah, a losing trade. Good, good. I wanted to see some losers. So this is one that I would have made a trade, but I would have lost on. So now finally one that we've likely lost. So this actually was not, this is currently in this state, but at the what we look for is the open, right? So at the opening at 243.2, I'm gonna actually give you what the letters were at the open. It was on the bull side of the market. It was on the long side of hedge pressure, and it was on the upside of those two. So actually Microsoft would have been this setup right here that I would have stopped on had I lost 242.5. So if Microsoft opened right here, I would have done absolutely nothing. I would have bought at 242.5 and stopped 1 point below that. That's it. And if I stopped, I'm done for the day. So I would have taken a 1 point stop. That's it. But the bet was that the market was going to continue to go like this. I can already tell from what these numbers are and the letters are now that Microsoft did not hold that, and it was a losing trade. But I lost the control, and that's the whole best part. Okay. So again, Microsoft, there is, make sure you right here, double check this. Yep. So I would have bought at 242.5, which is what I showed right here. And again, that would have looked nice and good, but had we lost that market, I would have closed out and got out of the way. So neat is that while you do get that pressure from the liquidity map, it was BLU at the start. The market found unusual selling, and then all of a sudden I stopped out, which is great. I didn't bag hold. I didn't chase the short. I was long bias, and I got out of the way. 241.5 is my stop. I take a 1 point stop. So I'm down little teeny weeny bit. No. Do you need to use the single date? No, but single date is to map out a date in the future. This is a whole new thing. Single date is like if I want to look at trading an option, I want to see like I bought a call for like 2 weeks out. Single date allows me to map out any date in the future. What if I bought some calls on the 10th of, or let's say like the 13th of January, and I want to see what those calls look like. What it will do is it will draw out just those days expiring market maker options, and that's it. What daily mode does is it accumulates all weekly options that exist and put them all together. Monthly mode accumulates the monthly options that exist and put them together. Single date lets me pick any single date in the future to map out swing trades in the future. Okay. How do you know it was at the start? BLU. Okay. So the way these letters are, and they show you immediately where all the balance of pressures are. The easiest way to understand it is there are 3 indicators together, and these are the letters here. Again, we'll teach a little bit of a class on that, but we also give it to you in real time. So at the start of the day, you have 2 different codes. You have a bull or a bear. So far, so good. You have long or short weekly hedging. This is based off of hedge pressure. And we have a relative orientation between weekly options and monthly options. So the difference between the two, we call it up or down, which is like the orientation of weekly versus monthly. So weekly options are typically bought by day traders and market makers who are balancing imbalances overnight. Your blue hedge pressure is very actionable pivot day to day and will rapidly move from one day to the next, from one spot to next. These numbers will print at 9:30 in the morning and stay there all day. Tomorrow, you'll get a whole different set of numbers. The monthly hedge pressure also moves every day, but it moves slower. So hedge pressure might move there. Monthly might move there. It moves, but much slower, because this is actually the people that buy monthly options are long-term institutional funds and firms that will hold a stock for months to quarters at a time. They're the ones that buy expensive monthly options and hold, right? To hedge, say that they want to buy Apple stock and hold it for the quarter. So they can get it on their books, right? They maybe have a mutual fund and they're going to put it on their books to get the dividends. So they need to buy monthly options every single month for a quarter just to be able to stay in that position. So monthly option is your greater institutional sentiment. Your monthly hedge pressure is showing for the month, which expires on the 20th of January, that Microsoft now has a very, 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 very strong immediate bearish sentiment on the first day of the calendar year that might extend all the way for a month. We may have a really nasty month for Microsoft, right? So this to me dictates whether I long or short. Longer story on that one, but below monthly hedge pressure, I'm very short biased and only looking for short setups. Above monthly hedge pressure, I'm personally looking for long setups, which is why today I would have taken that setup and I would have been scared out of my long, and likely for the month until we're above here tomorrow or the next day, I'm no longer trying to long. My swing mentality is already no longer long for Microsoft. Does that make sense? Okay. So the way you do the letters manually, this will show you where the market is in real time. So when you chime in today, this will tell you where that current pressure is balanced. So at the start of the day, B or BR is very easy to find out, like right out the door. If you're on the bull zone, which means you're in the middle of bull zone, it's B. If you're in the bear zone, it's BR. Easy as that. So right now, I'm not doing any trade today. At the start of the day, what I'm saying is at the start of the day, why was it B, L, and U? And then now it's B, S, and D. Why did it change from one to the other? Because when you change regimes, right? Unusual activity at hedge pressure, and you have a break, anytime you break through these, the market becomes irrational and sporadic as well. If it doesn't hold, I just get out of the way. And again, this is another thing that's random. So when you're, first and foremost from today's lesson, if you open in the middle of these and you touch the middle like this, it's random and the day is practically over. We don't make any more assessment. Another random rule is if you open an expected direction and you lose it and stop out, the market again is random on that break. So it can do random stuff. Again, I'm not trying to directionally trade it. I took my loss and I'm happy it was small, right? Yeah, the MHP broke as yeah, you get it, right? So at the start of the day, why were the letters the way they were? Is if you open on the bull zone, which we did, there's the B. We're still there. It's B because you're in the B zone. Long and short is this blue hedge pressure. That's it. It's that day-to-day really solid pressure that you get from just market makers hedging the overnight imbalances that they have, right, at the end of the day. So long means you're above here. Short means you're below there. Typically, like left to its own without unusual volume, which we had unusual selling pressure today from other mechanics, the market just slowly drifts away from hedge pressure from whichever side you're on. So while we did have markets squeeze a little bit at the open and people immediately started selling, when you break through that hedge pressure, it's considered irrational. It's one of the 5 sit out flags we have. And then once that volume starts to decay, right? Once people step away from the trade, just algorithms at that point, you start to drift away from hedge pressure. Now, while I would have taken that long, I would have stopped out right here, which is great because I wouldn't have been bag holding all day. So I like seeing when that, like my trade plan wouldn't have played out because I can show that I still use the same thing for risk management. So even though the trade was great, it looked amazing, I would have got 3 or 4 points on the run. As it's falling, I likely would have stopped out somewhere in here and my loss would have practically been negligible, right? So risk and reward, assess taking a long on SPY is a good probability trade. Okay, so let me start off by saying possibly, but you have to remember 2 things happened. SPY passed through a liquidity pocket. So the entire index is random for SPY. So SPY today had this mechanic. So SPY, the whole index itself is random. So it's kind of a curveball to the market. Number 2 is any stock that breaks through hedge pressure one way or the other. You just had like people step in and overpower the market. And market makers like, ooh, I didn't expect those bulls or bears to just show up here. Maybe somebody squeezed on a margin call. You don't know. But the market is a little random too when you break through hedge pressures. So you have 2 things. You have random SPY and random Microsoft. And so normally is a BSD along at a bull zone? Yeah, right? But would I take it with these 2 random signs? Probably not. Right? Oh, I'm sorry, BSD. No. Is there a buy? No, there's not. My bad. Don't listen to what I just said. It's not. The answer is 0. So there is no proven support in a BSD as right here. So no, I wouldn't, even if it wasn't random on top of random, I still wouldn't buy here. The selling or shorting pressure is so hard or so high that I don't expect there to be a support. So I wouldn't be buying. I'd be glad that I attempted to buy and stopped out. So imagine in a risk management sense, one of the best things is, you know, it did catch that opening pressure in the BLU, which was good. And then I lost it. So I'm out. And once you lose a trade, and we teach you, once you invalidate a position from some unusual behavior you can predict, your loss was very small, right? And then you don't try to revenge trade. Just forget about it for the rest of the day. And that's the best part. No, the DD strat was correct. You guys, let me teach you the part you're missing. Anytime you open inside the bands, if the number is greater than half, what's the rule? Let's see if you can remember the rule. I'll make you guys type it so I can train you. This is a futures thing, but it also works a pivot. Doesn't mean it's a bull day, no. There we go. Let's correct that from the start. Doesn't mean it's a bull day. This is an exploit of the risk and volatility in the futures market. Starting over. It hits the top band once. Blue Edge nailed it. It's not bull. It's not bearish. It means that there are more bullish stocks than bearish stocks on a market cap basis. Yes. And as Blue Edge said, it hits the top band once. It wants to touch the upper band at least once before it touches the lower band. Higher probability. It doesn't mean it will, but it's a higher probability. And did it touch the upper band? Only if it hasn't touched it already in the session. In the Globex session, it has to go all overnight. You already touched the upper band in the pre-market session, so it's not applicable. It touches it at least once. I mean, sorry, it wants to touch it just once. That's it. It already touched it. And Lori said it. And Blue Edge said it. So had this not happened, and even so, it touched the upper band. That's it. The trade exhausts, that doomsday trade exhausts right here anyways. But this wouldn't have been something you would have tried to do because once you touch the band, that rule goes off the table for the day. It's an exploit of the market spanning volatility to look for liquidity. If it's already spanned it, it's not going to try it a second time, predictably. Even though it did, you wouldn't have woken up today and tried to make that trade. Market would open here. You just said 0.68 DD. Ah, cool. It wants to touch the upper band before the lower band. But it already did it. So bye-bye rule. It already did it. Do you understand? If it takes place pre-market, then you don't try to do that any point. And once one of the three indices touches that band, you don't use that anymore for that day. It's like, pretend that all the indices were like this in the middle and never touch the band. Then you'd expect it to go up here before it goes down. And even though it did that in the equity session, and so repeating the rule, after 9:30, if you haven't previously touched the upper band in any of these three indices, it only takes one to invalidate the rule, all three of them together. If the Russell, NASDAQ, or the S&P touch their upper band, you stop there. We got it? So this is going to be incorporated in Rocket Scooter sometime in about 2 months. Right now, you manually draw them from risk interval. There is a video that shows you how to do it. Or when you become a member, our members will actually, they've made these on different platforms. They made like a Thinkorswim version. They've made a TradingView version. And we share it in the Discord for paying members. You guys can have it. It's in the members lounge pinned or in the tools area of the Discord. So that's just the thing that, but you have to watch the video because the bands have one manual thing you have to do. You have to change this number, and there's a bot in the Discord that tells you what to change it to manually. When it's in our platform, it'll be automated, so don't have to ever change anything. But you have to make sure that this is always up to date. This number you get in our bots channel in Discord that's called Risk Interval. It's called RI here. The bot channel is called RI. It tells me for NASDAQ, I put 109. It'll tell me for S&P, I'll put 29.5, etc. So just in general, the rule is if at 9:30 and none of the three have touched the band already, then if that number is greater than half, there's a high likelihood it goes up to the upper band before it goes to the lower band, which supersedes anything else. It's a bigger, higher probability thing than even liquidity map. It's a more predictable pivot, but even so, it's mostly used for risk management. So outside of these bands, none of us make day trades. We call it irrational. So remember when we talked about random markets earlier? Irrational is also random. So when the market is moved outside of any one of the three indices, all three of them are now in that chaotic mode. NASDAQ is now in an unpredictable, it's likely going to chop and do nothing today. It could rally all day. It could sell off. You don't know. This is very unpredictable, and your indicators will break down and fail down in here. How do you know it's random? You can prove it because the minute you're on the other side of that band, your volume no longer has a nice clean distribution. See, normally you'll have volume take place and you'll have some ups and downs from like hedge pusher breaks and whatever. But do you see right here? Do you see the difference between how the market, let's get a little less big dot right there. Let me show you something cool. I love how this tells the story of the market. Do you see that about like right here? Here, the market just generally is decaying volume, right? With a couple of spikes. An effect, the high volume pivot creates that. But you see how when you break in this range right here, you see how it's random? It's like all over the place. Volume is no longer in a nice, clean decay pattern. Do you see these random volume spikes that are like choppy and up and down? Do y'all see that? Isn't it cool that you can forecast when that happens? There's a clean break on this volume chart where the volume, while there are spikes, is still decaying in a general sense. When you interact with this edge, there's always volume spikes, predictable. This sits here all night. Here, volume spike, predictable. That edge, volume spike, that edge, volume spike. Market is trying to hold stability, and then there's a big wave off of that. Again, volume spike off of there. 1, 2, 3. But the minute you break and lose and become irrational, the volume is no longer in decay. Look at these massive, massive, random. Can you all see that clean break when it goes from sort of like ebb and flow to like, do you see that? Do you all see this? This is the whole point of this. easily seen that right here, your traditional pattern of volume, which looks like this for the day, with occasional spikes, but this still decays, immediately just spirals out of control. Imagine a car skidding on an icy road. Do we all see that? So outside of these bands, random volume, these are like margin calls and people rapidly shuffling their positions. You cannot predict what people are doing in that irrational market. This is rational in this particular case. Rational with some volume spikes from other like hedge pressure taps. There's your band interaction, market maker hedging here and here, market maker hedging here. So each one of these created a teeny volume spike against this normal decay. Predictable, all of that. Here, unpredictable. What is going on? Massive volume, 3,000 contracts, 3,000 contracts, 2,000 contracts. We haven't seen volume that high in over an hour and a half. People get frantic, and this is the crazy part of the market. So outside of these bands, you are flipping a coin. Do you see that and believe that now? This massive amount of volume completely breaks the pattern of a normal day of trading volume. What does a normal day of trading volume look like? Well, let me show you. They pretty much look the same every day. Market really high. Well, let's pull SPY. Look at an example. Let's do SPY. An equities chart, right? Let's do like a 5-minute chart. Okay. Traditional day, it looks like a J, a backwards J, a backwards J. It starts out high, it decays down, and then it typically just starts to ramp up at the end of the day, or you might have a catalyst that changes the path. But normally, backwards J, backwards J, backwards J, backwards J, backwards J. You see that? You see that? You see that? See that? Typically, the markets just decay. Here's a beautiful day right here. Just shows markets just decay, and then the last 2 hours of the day, they start to ramp up. So here's some rules at Rocket Scooter. Number 1, do not trade in the last 2 hours of the day, because increasing volume is increasing unpredictability. So far, so good? We like that? So the last 2 hours of the day, do not enter new trades. Put my butt chair. Oh, I feel so good for my lumbar. Yeah. Okay. Right? Number 2 is that a normal day will have, predictable volume spikes for other reasons, hedge pressure taps and whatever, but will tend to be in like a general decay pattern up until 14 o'clock Eastern. This is a trick. This is understanding how markets work. Why does volume ramp at the end of the day? Don't worry about it. We'll teach you in another session. But just understand that in the Rocket Scooter world, all of your indicators are now random at exactly 14 o'clock and later. The minute volume starts to grow on the closing hours, it's all random. No matter if it hits a mean reversion, no matter where it is, we don't play pivots in the last 2 hours. Write this rule down in your sticky notes. No new day trades in the last 2 hours is the stupidest thing you can do as a trader. And I watch people go out there and try to play power hour and stuff. Those are made up things by fake trading gurus. It does not work. You cannot predict what people are going to do, and you certainly can't predict how people are going to exercise their options at the end of the day. Can you predict this 5.5 million share print on that single 5-minute candle, or 5.5 million orders? No. That's normally what on a 5-minute chart, 6, this is like 1 million times 5 times 6, 3. That's like 30 minutes of trading all in one single 5-minute span. You can't predict what volume is going to do. You can predict where it's going to be, which we do, but you can't predict how people are going to behave, especially when it ramps up so fast at the end of the day. So rule number 1, no trading last 2 hours of the day. Rule number 2, no new entries when irrational, especially to the downside, because sometimes it bounces in and sells off. Sometimes it collapses. Sometimes it goes nowhere and then rallies. Anytime you're outside of here, this behavior is random. Here's the proof. Here's NASDAQ. Imagine you bought the dip right here. You blew up your account. Imagine if you bought the dip right here, you made a whole lot of money. Imagine if you market fell here and you bought the dip right there, you lost a little bit. Imagine the market's right here and you bought the dip, you lost a little bit. Imagine the market's right here. You bought the dip. You made a whole lot. Made a lot, lose a lot, make a little, lose a little, lose a little, make a lot. Does that look pretty random to you? It looks very random to me as well. Hopefully I scare you into trying to guess what happens from there. The best types of trades all exist inside of this rational band where volume is just in a nice clean decay pattern. That's it. It's all algorithmic. It's all simple. It's all much easier order flow to understand. Fewer of these like random spikes. So far, so good? I'm almost done. But do you see how outside of this band, massive crash, massive rally, flip around, go lower, flip around, go lower, dip, rally, dip. I want you all to do me a favor. Guess today where we end up. I want you all to guess. And then after you guess, close down your platform and come at the end of the day. Don't even look till the end of the day and see how wrong you were. Because imagine it just being right here and then just kind of like hanging out there. No, sometimes it collapses. We don't take that risk ever because of that possibility. Do you understand? Get some yeses in chat. You guys understand that, right? So when the market is just spiraling out of control, you might think, oh, well, let me chase the short because that worked. Well, that didn't work that much. Maybe barely, maybe barely. No, you lost all the effort. Maybe one in a blue moon, you might make that. And then some days it does that. Outside of these bands, the market behaves erratically and random. The minute you leave the band, it's also random. The neat thing about random markets is you know it's random. You have control and you can stay out of the way. So rule number one, last 2 hours is random. Rule number two, the minute you breach to the band, market's also random. On any of the 3 indices triggers, all the indices and all the stocks. Believe nothing anywhere on any stock, on any indicator, on any index, anything. Once the index loses the band, all your stocks are going to be fucking weird. That's it. Okay. These rules are really nice. This band is very helpful to understand irrational market. So one of the better ways to do it is you can either sit out, or what people do is they will sell options outside the other side of the band. And that's one of the better tricks some of our folks have come up with. Is that there's another thing that happens is that when if you imagine like the random part being outside of the spans, right? Random and random. One of the neat things is if you're on the bottom side, now you can't predict what it does because sometimes it bounces and rallies, right? Sometimes it falls and crashes. But what we notice is that most of the time, if you're on the south side, it never goes to the north side, almost never. If you're on the south side, it never goes to the north side. If you're down here, it never goes there. If you're down here, it never goes there. If you're up here, it never goes there. If you're down here, it never goes there, and so on. You're inside the middle, it never goes to either side. I say never, I say rarely. If you're down here, it doesn't go there. If you're down here, it doesn't go there. You notice the pattern. If you're up here, it doesn't go there. If you're down there, it doesn't go there. Notice it doesn't break from irrational down to irrational up almost ever. So while the behavior is unpredictable, where it doesn't go is a very high probability. So what some of our folks here figured out is that when you're down here, selling calls up here is the trade they take. They trade on the I'm not going to predict the direction. Let me short the market there. Let me long the market there. Let me short the market there. Instead of taking the I am the bull, I am the bear, you can take the I'm not a bull down here and let me sell calls way up in here. Let's just sell calls for the day, 0-day calls. Maybe cash secured calls or share secure, whatever you want to do, or credit spreads. People understand that you can go back and count these. Is that instead of which way does it go from here when it's random, we know that it's random what it does, but we also know that while it could sell off, chop around, or even rally, even if it does rally, it is the rarest of the rare to see price close up in there. So the idea is, if you always thought I'm going to use indicators to try to guess the direction of the market, how about indicators, which we have is say, I'm going to sit out today. That's what I use them for. Or where's price not going to go? Instead of just chasing direction and trying to forecast direction of the market, which is hard to do, I can forecast with a high probability that it not go here. It does not go here, right? Not here. Did you all see that, right, today? I mean, I just showed you, but you can go back months and years of data, and this does that. It's a very cool thing. So instead of shorting the market, I can sell calls, which is a not bullish or bearish position, really a not bullish position. It's the same thing. If the market goes down, those calls are going to make money if I sold them. So the idea is that which side it breaks through, day traders don't try to short or long that market. Is silly. If anybody right now is trying to short or long this in futures, they have no idea how the futures market works. And I mean, I challenge you to ask them a fundamental question about futures, like how these margin requirements are calculated. This is an exploit of that. It's neat. So instead of shorting the market, I can sell SPY calls similarly outside of that band up there. It's very rare that it ever goes back to the other side. We did it on Friday's stream and we counted them. We went back months and counted them. And only like 2 or 3 times did it go to the other side. And both times it took a catalyst to make that happen. So the neat thing is that under almost all circumstances, it's like very rare that you go from one side to the, I mean, talk the rarest of the rare. And it takes like a catalyst, which clearly this day was a catalyst. The 7 a.m. candle that dipped and ripped clearly on a Thursday, we all know what that was, the inflation numbers, right? So a catalyst can make that happen. But in a normal day, once you breach that power and all that volume starts to surge, it'd be almost impossible for all of Wall Street to come in and start buying at the same time at the same price with different motives to buy, right? So once this hedging takes over, it typically seals the day. It'd be very rare to go all the way down to the other side. So that's one of the cool setups that we also do with that. Okay, thanks for the lesson, no problem. Okay, you're here from India? Welcome, welcome, welcome. Okay, so anybody have any more questions? We're gonna pivot over to Zoom in a second. Let me get people in here. Remember, so a bunch of people signed up today. Get you in here in the roles. Okay. All right, everybody, head over to Discord real quick. Cool, cool. Okay. So back to the platform just before I get out of here. You'll notice that right now, as we've been talking about the greater futures risk, the market will be random from here, right? And so if I'm talking about SPY, that upper band was like relatively, probably about like right here in SPY. So we're going to sell calls in SPY today, like down here, 246 and higher would be the less probable position. And another thing that kind of seeds this randomness is that, oops, that's markers. Sorry, SPY. You had a bunch of things just line up on top of each other that can prove the market's gonna be very random and weird. So hedge pressure breaks, liquidity pockets, random sign number 2, random sign number 3. So random number 1, random number 2, breaking through that doomsday, random number 3. Here's that erratic volume on SPY. Nice, hedge pressure, volume spike. Here's those first 2 band interactions. Same thing at ES, right? It's the same spot here and here. See a little bit of a increase in volume as you interact with that in the SPY. But that futures thing is very clear and defined, right? It's a more prominent thing in futures. So when you put them together, oops, wrong chart. When you put them together, you'll see that the pivots are very, very, very easy to see in futures. So I usually have both charts up when I'm trading stocks. I look at futures and I look at SPY itself. Very clean, very big spike, very big spike. But you'll also see the risk mirrored as well in equities as well. So again, that's where those bands effectively are. And then eventually we'll have them superimposed on the chart and you can actually like show the futures chart down the road when we get that data, which is probably February, March is our estimate. But also know that once you break through, remember that was where that band broke on S&P futures. Look how SPY volume itself, even SPY is erratic and weird, right? Volume increasing over the course of half an hour and spikes that are bigger than they've been all morning. Because again, margin calls and people rapidly jumping out of positions. You can see all that right here. So the idea is that from this point in time, you're not going to be able to guess anything. So I look for where SPY could particularly pivot. And we always know monthly hedge pressure is likely a pivot, right? There's always going to be a high volume spike when you get there. But then I can now, again, we have layers. You can keep going. Resilience, negative. It means the majority of market cap and stocks are breaking through their monthly hedge pressures and also continuing to crash. So if the stocks are losing, anytime this yellow line is below zero, it tells me that when SPY gets to its yellow line, I don't expect it to hold. I do not buy that dip on top of that. And so what's neat about the random is that it actually is forecasting that random things will happen. And if the market wasn't random or irrational, I would have bought that dip. But because it's random and irrational, I wouldn't. Just because I wouldn't do anything. And even so, this is proving that it's likely going to not hold. So even before we get there, I would probably think that it would break before it holds. So even hours before it gets there, I still have a better idea of what I would do. Sit out for the day, sit out for the day, outside the doomsday band, sit out for the day, clearly sit out for the day. What would I do if I wanted to make a trade? So I would sell calls right there or anywhere above to bet that it doesn't end up there at the end of the day. And that's it. If I want to predict a direction from here, we go to here, maybe bounce, maybe fight. But again, it's random. And I would bet that we probably close right there. Maybe. But that's my guess. And again, it's a guess. In random market, the guess is really hard to do. It could literally do anything. But what it likely isn't going to do is end up here. So that's a higher probability trade, is to bet where it doesn't go rather than bet on where it goes. About maybe 60%, 40% that we're like here, 60% there, maybe 40% there. But 100%, I say 100, 99.9%. My brain. These aren't real probabilities. This is my brain. It's saying 99.9% that we're not here. There's a lot of good trade eats, and they're like a lot of good eats in there. Good little buffet of trade setups I can do. So I don't take these directional moves. Markets are rational, sit out, and good. So the idea, risk management, position management, everything. We're going to start our day trading challenge next week. Can't wait to show you guys. It's going to be awesome and fun. Thanks for tuning in. Join the Rocket Scooter family. We love y'all to death. And we want you to check out our platform. Again, there's a free trial. No credit card required. Positional Risk. I did the game this morning where I didn't look at the chart, a history of the chart, to show that I don't need technical indicators to look at the past to try to forecast the future. It always sounded silly to me, and I just proved that it was. I'm using today's positions to make today's trades and trade ideas for myself. Use risk management, position management. We teach you guys how to navigate the markets, why volume happens, why things happen in general, how you can make better trade plans, hopefully for yourself, and feel like you have more control. That's always what I always wanted as a trader. So you're continually making new stuff to keep all the things that you want. Thanks for tuning in. First day in and you made 100% on trade. Well, killing it, Matt. Good job. That's all you, buddy. Look at that. I didn't even give you a call out. I didn't even hand a trade to you. What, you came in, did it all yourself? Congratulations. That's what we want to hear. Traders empowering themselves to do things on their own. Love you guys. We'll see you on Discord. We're going to pivot to a Zoom call in about 5 minutes. See you on a little bit.